Welcome back to the NWR Resources virtual series. My name is Kerry Stevenson, and joining me today is Mark Strizek. He is the Executive Director of Tietto Minerals. ASX code is TIE. How can you forget that? TIE. Now, what do TIE have? They have got, they're fast tracking the development of the Abujar Gold Project in the Côte d'Ivoire, West Africa. They're targeting first gold at the end of next year. And they've come out this morning with a DFS with magnificent numbers. Very exciting times for you. Over to you, Mark. Let's find out what's going on with Tietto Minerals. Getting on with the job.
Yep, Kerry, certainly have. And to be able to release the DFS after a PFS in April, it's certainly I would give credit to all the team that have been behind this. It's a real privilege. Well, it is a privilege and a pleasure to be able to talk about it today. So we've got on there, obviously, our exploration team who are part of this and done a fantastic job drilling away. And that's one of the keys with Tietto, is that we've got our own drilling crews and our own drill rigs, and it allows us to save and still drill 11 to 12,000 meters a month. And that's critically important in this game. Up on the right-hand side of the screen, we've got what it's all about. These beautiful lodes you can see there in the pits, AG Main and AG South. So today we'll talk about the DFS and the numbers and where the changes are on the PFS. So obviously we've got some forward-looking statements there. And I think this slide, this is, as we talk about the project and the value that's on the table, we've got a very undemanding enterprise value. So there's a lot of upside here. We're all shareholders and working, we're very certainly incentivized to see this turn into a gold mine. So the nuts and bolts, 4 million tonne in Côte d'Ivoire. It's all open pit. That's a big change. That is a change on the PFS where we did consider an underground. So it's very simple, open pittable from surface. And as you can see from the numbers there on the screen, we're hitting some fantastic metrics. 260,000 ounces in our first year at an all-in sustaining cost of 651. So that's 30% up on the PFS. And that's a serious amount of gold. And that's driving early payback. We've got 1.2 million ounces in the first 6 years at 200,000 ounces. Again, against the PFS, we're up 20%. And that's in an all-in sustaining of $804 an ounce. So this is really starting to position itself as knocking on the door of the top 20 production mines in West Africa. So it's a good result. How we got there? We're underpinned by probable ore reserves. And we've seen some growth in there up to 1.45 million ounces. Again, that's an uplift over 860,000 ounces in the PFS. And it also represents 78% conversion of indicated mineral resources. We've got 1.85. So it's another tick and another positive. So there's a lot of positives here. And that ore reserves, that underpins what we're talking about, a life of mine inventory. And that's 1.7 million ounces. And that's coming from 2 mines, AG, which is the cornerstone, the foundation of this project, and a satellite operation down the road. What we've seen, 54% over the PFS. And also we've been able to have a reduction in strip ratio of 6. The ore's gone 6 to 1. So down from, we had 8 to 1 previously. So all the metrics are moving in the right direction. Obviously, I'll say there that we're very, very comfortable looking at these numbers. They're underpinned by over 82% of gold production coming from that ore reserve in there, those indicated resources. So next one we're looking at is the financials. These have been done at 1,700, which is below the current price. And as you can see there, there's some absolutely phenomenal numbers in terms of EBITDAs. When we look at the NPV post and pre-tax, very, very strong. And you can see there, we've broken it down into Aussie numbers at the current exchange rate there. So this is a project number, 1.3 to $1 billion post-tax. So extremely healthy. The IRRs are very financeable. And I think one of the keys, Kerry, is we've been able to reduce our pre-production capital compared to what we had in the PFS. And that's down 13%. And a large portion of that is coming from a reduction in pre-strip. In the previous PFS, we had about 8 months of work there. with the improvements in the indicated material that's being presented to the mine engineers to consider for ore reserves. We've been able to reduce that to a pretty undemanding 4 months. And that's why we've seen we've been able to, even against the backdrop of some increases in other areas, we've actually seen a net decrease. So it puts us in a very strong position to be able to fund this. And, Kerry, we're all about upside, but the banking guys, they're about the downside. And that's why we've shown you there on the bottom, that little table there at $1,200, well below the current prices. You're looking at still very healthy metrics, payback of 1.8 years, and almost looking at doubling our, when we're looking at cash flow and so forth, doubling the return on your investment. So these are very strong metrics, and that's something that the financiers will be looking at. We're all upside, they're the downside, and I'm very happy to say that the downsides look very well covered, and the break even on the project is down below 1,000, down at 940. So this is a very healthy project. Now, obviously, we see the DFS number. It's only a snapshot, and what we'll talk about in the next slide is where we see the opportunities to improve on what are already healthy gold production metrics. We think there's ability here from what we've got on the ground to be able to add to that. So we're currently working through an infill program, and that is targeting the first 2 years, and we're looking to lift the indicated up to measured resources. We're about 2/3 of the way through, and we have been releasing results from that, and shareholders and investors would see that. So the key with this so far, what we're seeing from our drilling results are confirming what we've seen in the previous drilling results. So that's giving us a lot of confidence to be able to move the project ahead. The other aspect we're looking at is drilling underneath that DFS pit and seeing what's down there. So we'll have another 5,000 meters going into that. And then also continuing in our exploration drill program. We've got 20 targets that are all within 10K trucking distance that haven't been drilled yet. We look at another, probably a resource model coming up at the end of the year or early into next year. That's not critical for how we see the project being developed at this stage. And the other aspect, we had some good results, which we'll talk about, the ability to look at targeting some lower grade mineralization from APG and looking at some results from that. So those points, I'll expand on them in the next slides. This little one here shows the mine production. The red area is where the project will be starting. So we're targeting high grades, and that shows, you can see in that first year, the project's able to produce a head grade of 2 grams a ton. So I'll run this as 30 seconds and just showing the staged approach, very conventional open pit mining using gear that most of the mines in West Africa, 1,200 ton excavator, 120 ton excavators, 1200s, and some bigger gear working on the mine site there. So the DFS has done its job, but we do think there's an ability to be able to improve on that as we go forward. So from the underground, this is a bit of a hit list there. We compiled in the black, you can see the DFS pit. We've got the 2000 shell that was used for constraining the ore reserves. And there's some absolutely cracking grades below that pit that could conceivably be part of an underground once the open pit mines developed. So as we said, looking to put about 5,000 meters into that before the end of the year and target those high grade chutes and see if they get bigger. At this stage, it's the drill spacing is fairly wide down there. So the indications are good. We just need to do the work, and we've got the drill rigs on site to be able to do that. The other aspect is this, the DFS is confirmed APG as a satellite operation. It's lower grade, but it's oxide. And it's something that as we continue to drill, currently only has 70,000 ounces of ore reserve in there, but there's a target of an inventory in there of 200,000 ounces. So looking to be able to add further drill confidence in that. And there has been some okay numbers as well. So maybe when we drill it out, we may add more of those higher grades. So we'll see where it goes. And really this little slide just showing, the fairway that we've got to work with, 70 Ks a strike, but looking at that there's 10 kilometre, there's 20 targets sitting in there where the mill would be at AG. So plenty of opportunity just from organically growing and drilling and growing resources. And we can drill between 10 to 12,000 metres a month at $35 a metre. So it's an incredible competitive advantage. Heap leach, these are some scoping numbers that we released earlier in the year. We have samples here in Australia being tested, and this could be a bolt-on that goes on. We need to do the work and see where it goes, but there's plenty of examples, and in particular, Matt Wilcox has worked on at Bully and Bissa, where they built a CIL and they added in a heap leach program later on and added 50 to 100,000 ounces onto the production profile. And I think that's the key here on this slide. This is the ounce production profile at 260,000 ounces. Key takeaways, that dark green is all indicated and part of that ore reserve. And you can see that very strong support from indicated resources in that first 6 years, that 1.2 million ounces. We see opportunity, obviously coming from that infill drill programming, updating potential resource, refining the schedule, looking to target that 157. We think there's opportunity to build that up. And as we know from the operations in West Africa, you look at what Richard Hyde and the team and the project that Matt built, that's been able to produce well above the headline number, the nameplate number. So there's opportunity there. And the other aspect, as we look at that back end, we think there's a lot of opportunity to improve from a long strike drilling at depth, talking about that underground, potentially a heap leach as well. So bit of work for us to do, but we've got some great foundations to build upon. And we think there's, as we work through these programs, we'll be able to keep everyone updated as to what we think could happen in that back end. And where we're currently sitting in terms of this is a serious project, and we are knocking on the door of the top 20. Year one, 260,000 ounces. You can see those as Sanbrado from the numbers that Richard released yesterday, that 280,000 ounce forecast. For years 1 to 6, that 200,000 ounces per year. In terms of production, we are knocking on the door of the top 20 there producing mines. So it's a very exciting time for us. And I think that this chart really demonstrates just how the potential that's here and moving amongst some big mines. Abujar is certainly something of significance. Won't dwell on this too much. Conventional CIL, all the pieces, green grid, hydropower, cheap energy costs, conventional open pit mining, and all done at a DFS level, environmental and mining approval. Looking to knock off the mining convention this year as well. We've got the government certainly giving a lot of interest into seeing this project being developed. And that's probably a case here is that we've been extremely lucky to attract someone of Matt and the team. He's certainly got the runs on the board with over 4 projects delivered in West Africa. Obviously, the last one with Sanbrado did a fantastic job there and got a great team of people in all the aspects that you need to have a strong owners team get this built. And this slide, in the bold numbers there, you can see, so the execution in West Africa has been, if we could use the term gold standard, Kerry. The bold numbers there, you can see that's Matt and the team responsible directly for the build of those 3 projects. And they all came ahead of schedule, under budget or on budget. So we definitely believe probably one of the best builders teams in West Africa, and that's critically important. So it's an aggressive schedule, obviously contingent on putting away the funding piece, and we think based on those numbers, this is something that's going to be very attractive. Looking at gold at end of Q4, it can be done. The team that built Sanbrado were able to build that very quickly during COVID as well. So that's where we've got a bit of a head start. We've been doing some front-end engineering, some early works. We've got a mill secured. So we've been ticking the pieces as much as we can without spending a lot of money and taking it off that critical path. So look, it's going to be a big year, but we definitely, and I think against that, we'll also be continuing to explore and grow our resources. That's one of the keys with Tietto. You get 2 things at once. It's a pretty exciting time. And look, wrapping it up, compelling DFS, some very good numbers. I think the key is that the resource is growing. We've got that drill team that's allowing us to drill very aggressively. We've got 31 million Aussie in the bank right now. It's a large scale, 1.5 million ounce ore reserve. And we've got life of mine of 1.7 million ounces. And I think the key here is lots of news flow, lots of catalysts. And I think we've been able to demonstrate that we move very, very quickly. And you've got to run to keep up with us. We think there's a lot of value on the table here, Kerry.
Mark, a brilliant presentation, and I agree, lots of value. Dev, I think that Mark has answered your first two questions that you've put there in his presentation, which, by the way, Mark, really good presentation. One of the things that I would like to ask you, and Dev, put a comment below if you feel that they haven't been answered, your questions, but one, Mark, was, possibility of increasing production in years 2 and 3. Well, you've answered that. And exploration upside and increasing mine life, you answered that as well. One of the things I'd like to know is when it comes to funding the project, you talked about, I think it was construction was 200 million, was that right?
Pre-production capital, that's right, and contingencies, yes.
Yeah. What are you looking at for that? Have you got the banks running all over you at the moment? Because there's plenty of liquidity funding money, if you like it, with all this printing going on. How are you finding that?
We're finding it, there's certainly a lot of interest, and we're working our way through. We've been able to share the PFS results, and for me, and talking to the debt providers, the key was getting that certainty from a DFS, having that big increase in the ore reserves up to 1.45 million. So look, I think we're looking, it's a pretty good position to be in. And there's been some fantastic examples of project execution. Obviously, Matt the Builder has been part of that as well, of those projects. So look, we think that getting these numbers out there and the robustness at the sort of numbers that the financiers will be looking at, we hope to be able to continue on the fast tempo that we've shown so far, and we'll be keeping everyone updated on our progress, Kerry. That's probably as much as I could say at this stage.
Yeah, absolutely. But one of the things also to point out to people that are looking at this is you're all in sustaining costs, or 600 to, let's call it 600 to 800. Even with a share, with a gold price currently 1750, and even if it went down to 1600, you're still spinning off cash left, right, and centre.
Look, that's right, and it's look, having that big mill, this big resource, the big increase in the ore reserves, and a lot of high grades close to surface. It really allows us to turn this into an ATM. It's a cash generating machine.
I love it. Ladies and gentlemen, if you want to ask a question, make sure you pop it in the chat box. As I said, Dev, he's answered your questions, but if you've got a question for Mark, now's the time to ask him. Mark, how many rigs have you currently got on site? And that's my first question. My second question is for those people out there that might be saying, oh, West Africa, I'm not quite sure. Just explain how safe and how easy it is where your project is.
Yeah, right. So we've got 6 diamond drill rigs on site working for us. So that's we own them, and we have the team of drillers working on that. So these guys are drilling between 10 to 12,000 meters a month. And when you go back and you look at all of our expenditure versus the meters we've spent, these are real numbers. I mean, it's certainly, I think people can't quite believe it, but we're shareholders, and the guys do a great team, and we love being able to churn out those meters and churn out the results. In terms of Côte d'Ivoire, it's a very good jurisdiction. You've got some majors working in there. Obviously, Perseus had a fantastic run with Sissingi and getting Yara into production. That's a big part of their valuation. You've got Endeavour as well that have become a big gorilla down at Idi, and there's Barrick up there in the north. So it's a country that you've got to be upfront, and they've had some challenges in the past over 10 to 12 years ago, but since then it's been growing at double growth. CPI, the growth index has been looking very, very strong, and it's also, look, mining's only a small part. It's currently 2% of GDP. And,
oh, is that all?
That's right. It's very, very small. It's probably similar to Australia used to be, in that there's a lot of primary produce, agriculture, coffee, cocoa, and so forth. Yeah. So that's there. So the government has an aim to take mining exports or mining value up to 4% of GDP. So they're very, very supportive. We're in a great location. We're right in the middle of the country. We've got great infrastructure, dual lane highways, an extensive power network. As we've run through the EIS and the level of even the literacy of local villages around us is much higher than what you normally see in West Africa. So you've got skilled workforce. Talking to the guys in Perseus during their build, I think the only thing they weren't able to get skilled workers was very high level detailed welding for some of the tanks and so on, but everything else is there. And because mining's been going on with Tongon and so forth, and in Yeba Mines, Agbaou, there's a number of, there's a lot of nationals that are working in there. And we've got a fantastic national team as well. 3.35 million ounce discoverers, they're talking about 4 million ounces. These guys are very professional. They're doing an absolutely fantastic job. And on the government side, this is something the government gets a 10% free carry. So they're very focused, obviously, as all governments are, about the royalties, the revenues, the taxation, the employment opportunities to come. Things like our power line, that's a project of national significance. So, and Kagan is just recently back from country, and the government is certainly giving this its attention, and they want to see another large-scale project being developed in Côte d'Ivoire.
Mark, a couple more questions. Has COVID had any impact? I mean, by the way, I've known you for quite some time, Mark. I've never seen you so excited about what's going on. So I think it's great. So clearly the numbers and what's going on is great. But I have to bring it up. Has COVID impacted at all, or out there and where you are, it's all pretty good?
Look, it's definitely manageable, and you've seen two recent builds, Sanbrado, Yaouré, coming through it. So the impact, no, look, there's no real impact for us. And as we look forward to planning out the build and so forth, we don't anticipate any issues. And it really is a case that dealing with malaria and all the other aspects is that everyone's pretty sensible about disease, because it's something people live with all the time. Whenever we're having discussions, everyone's wearing a mask and not getting too worried about it. So, Kerry, I gave you a long answer, but the short answer is no, it's not a problem.
Short answer is COVID isn't bothering you. No. Last question for you, Mark. From an investor's point of view, right now, share price about 38 cents. You've got over 30 million in the bank. So you don't need to go back to the market at this stage. What do you say to investors that are looking at ASX code TIE, Tietto Minerals right now? What do you say is the value for them in investing right now?
Kerry, I think, look, there's an incredible amount of value. We've just run through those project NPVs. Yep. Look, in terms of where they are, we're sitting down here. The ultimate value is, look, it's, I was use the term a bagger or so forth. I mean, this is there's multiples here, Kerry. And you can go and you can look at the record of companies that have done a similar thing, and there's been a significant uplift of value as you move through that development into production and realize that. And obviously we've seen Yaouré build, what their value is for Perseus, and you've seen West African with Sanbrado. There's a lot of value on the table here. So where we're currently sitting, it's a very, very attractive proposition, I believe.
And I also think, just to remind people as well, way in the beginning, they turned around and decided to buy their own drill rigs. And what you said before was $35 a metre for your drilling costs. It's because you own the rigs. So they've done some really clever stuff in the beginning, and they've kept it going throughout the project. Mark Strizek, great to see you. Congratulations on all the news. And I wish you all the best. I'm sure there's going to be a lot of news going forward. Thank you for joining us today at the NWR Resources Virtual Conference.
Thanks very much, Kerry. It's a pleasure.